conservative forecast, decent number print for the second quarter. So what do you make of it?
Well, so I think two things stand out. One is currency will have a 6% impact for next quarter. So we knew Facebook is highly exposed because of their international revenue exposure. I think the big thing that investors are focused on is that ad pricing decline of 14%. What that shows is they're making up their numbers by increasing ad loads. So their ad impressions is okay. They're trying to pivot to Reels and showing a lot of video ads. But really, I think the way they kind of came in line with the 2Q estimates is by increasing the ad loads. And we know if users see more ads, they don't like it. They get kicked off.
So that's exactly where I was going to go, Mandeep. At what point do we sort of see, I mean, for lack of a better term, demand destruction when you're scrolling through your Instagram feed or when you're scrolling through the Blue app, Facebook, and there's just too many ads and it's not a good experience?
Exactly. So look, I think they have an engagement problem with the Blue app. Even with Instagram, their engagement seems to be going down, and they're really trying to play catch up to TikTok. Now, we know from past experience that once a product kind of loses momentum in terms of engagement, and Facebook has done that to an extent with stories and catching up with ad formats. But in this case, the problem really is they're pivoting to TikTok-style AI-based recommendations, so moving away from the social graph. And there's no guarantee that they'll be able to come up with a better AI algorithm, given TikTok has had such a head start.
And we heard from Mark Zuckerberg saying that. He is quoted saying that it was good to see a positive trajectory on our engagement trends this quarter coming from products like Reels, like our investments in AI. I mean, put this into context. How important is this when you think about, the parent platform, Facebook, coming off in terms of engagement?
Well, so look, Instagram, we know, is still quite popular. They still have that creator base. The problem is you have to look at Meta as an aggregate of Instagram and Core Blue app. Now, Core Blue app, if you back out the numbers, really is in a decline. And when I say decline, their ad impressions are going down, and their ad pricing has obviously taken a hit because of all the IDFA changes. So how much can Instagram make up the weakness in the Core Blue app? I think time will tell, but clearly they are growing below inflation, so they have a growth problem here, and I don't see them turning around in terms of top-line growth anytime soon.
Hey guys, the CFO Outlook commentary, they talk about a continuation of the weak ad demand environment, and they talk about it being driven by broader macroeconomic uncertainty. They also talked about reducing hiring and overall expense growth for this year because of a challenging operating environment. Mandeep, how much of this, though, is Meta-specific, or how much does this tell you something more broadly about our world?
I mean, all these companies overhired. They thought they would continue with that 30–40% growth during the pandemic, and there was certainly a pull forward in growth, and they hired too much. So right now they are trying to freeze hiring and do cost controls, but clearly in hindsight they overhired.